Hey traders, welcome to Charts and Coffee. Hope everyone's having a good morning. Time to caffeinate and dominate. So let's get to it. It's Tuesday. So the way I look at this Tuesday's trading session is it might be the last real trading session for the week, because tomorrow we go into probably Wednesday morning. We'll see some attention because there's some data coming up. Thursday, of course, bank holiday in the US. And then, of course, Friday, national holiday of Black Friday. Of course, it's a half trading day anyway. We have FOMC meeting minutes at 2 p.m. today, which is certainly going to have some effect on what's going to be expected from the US dollar, the treasuries, and of course, the indices. Do the minutes reflect that there's agreement amongst the voting members that rates do need to be cut? Are the members starting to sound dovish? This is the cliff note, so to speak, of what happened and culminated with the last meeting decision. But we get if you want to call it a sneak peek of that conversation. But it is a very curated, very manicured, I should say, conversation synthesis of what, before you would hear about the dissenters, before there would be, whatever disagreement there was amongst the voting members, it would be present in the minutes. Minutes aren't quite that transparent anymore, which is fine, right? As long as the messaging is they're going to cut, now we're going to be fine. We're going to be fine, meaning there's a consistency in the message, right? So we had a pretty nice move yesterday. Congrats to my Sector Secrets Mastery folks who I remember reading this morning. I hear from the members. Jeff rode the NASDAQ for 154 points. We set up the QQQ calls. We set up the NQ futures. You can do both simultaneously. They don't have to be an either or choice. You can do a little bit of QQQ options. You can do a little bit of NASDAQ futures, even the micro. So congrats, Jeff. That's awesome. And that was just Monday. Let's see what today brings. Today might be trickier, though, because of that 2 p.m. FOMC meeting minutes. All right. So let's get to it. As always, best part of our show are your questions. And let's dive into those. I'm taking a look at the daily chart of the S&P right now, by the way. And if you've been following along in Top Tier Outlook, which, by the way, went out yesterday, we are continuing to focus on NASDAQ primarily, then the S&P, because XLF has come on quite strong. XLF is a very important cylinder, if you will, in the S&P engine. And if you have XLK and XLF moving higher, you've got actually exactly what this engine of the S&P needs to continue to follow through to the upside. XLK, XLC have been doing the heavy lifting for the NASDAQ. So again, that sector secret, not so secret, is which sectors are moving for the indices, keeping them on track. All right. So yes, absolutely. Happy Tuesday. Great to see everyone. And first question is, Alex asks, I don't remember seeing Fed Fund futures 100% certainty for even one meeting, much less the next two in a row. Maybe you haven't been trading long enough. No, we don't need 100%, Alex. You will seldom see Fed Fund futures that are 100% because there is a future. So just to give you an idea of what the Fed Fund futures are and why I look at them so much. A lot of folks have opinion, right? And I think we've seen a lot of those opinions throughout 2023, where folks will talk about what the markets are going to do without factoring in what the Federal Reserve is going to do. And I think I can pull this up here. I'm not sure. The Fed Fund futures are a futures contract, and I may not be able to pull this up. But what they are is a futures contract, and there's one contract that will correspond for every meeting. So there'll be a July futures contract for the July 3-1 meeting. There'll be a May contract for the May meeting. And in each one of those futures contracts, much like we would look at bond futures to understand what bond traders are thinking about where yields are going to be. Remember, futures are about the future, depending on the contract expiration. Fed Fund futures are very similar in that manner. Now, to say 100%, which means that every single contract is an agreement about being long or short or whatever it is, a certain contract, right? They all agree that this particular price is where Fed fund futures are going to be. We know that's impossible, right? We're not going to get 100%. We don't need it either. What we're looking for is 80%. Pareto principle does rule here. So we're looking for 80%. And once any one of the expectations reaches 80%, that's what I would consider to be, generally speaking, fully discounted. So no, we don't need 100. On the day of, you will see, especially in the moments leading up into the meeting, it could be an hour, it could be 2 hours, you'll see 90%, 90 plus, sometimes 98, 99. Yeah, you'll see right up until that very edge, but never 100. Yeah, never 100. Okay, and again, don't need it. Okay, next up is, what is a good way, hey there, Philip, what is a good way to scan for hourly and daily setups using the DPMR? The same way I do with the HPMR, Philip. There's no difference. I'm not a fan of scanning. I'm not a fan of scanners. The reason being is scanners look for a technical analysis base, an indicator-based reason that certain stocks should be on our radar. I don't actually start there. Well, let me show you what I like to do, and this will hopefully help. I'm going to move a screen into view. This is how I look at the structure of numerous symbols at once. And I want them grouped together in a way that is logical. I emphasize logical, because looking at a group of stocks, because they share the same, RSI reading, makes no difference to the stock's relationship to each other. Now, why would that matter, Rog? Because high concentration weighting is the way in which markets move. Whether we know it or not, it's like gravity. We can ignore gravity all we want, but it is what it is. It's going to affect us all. This is the S&P. If I crack open the S&P, it's in this order, these stocks: Apple, Microsoft, Amazon, Nvidia. This is not only the composition of the S&P, but this is the way the stocks will relate to each other to a certain degree. If there is strength in the heaviest weighted stocks of the index, it can have an overall bullish effect on the other stocks, because the S&P is going to rally or rise or sell off and sink based on what Apple, Microsoft, Amazon, Nvidia, Google, Berkshire are doing. So you have to look at that connective thread from stock to stock, not from, hey, this particular stock had a moving average cross, and you're looking at a disparate stock in a different sector or a different index that has no bearing on what's happening, say, in the S&P. So the groups of stocks matter. That's how I scan. Now, so that's the first criteria, right? The next criteria is, what is the technical similarity? And for me, that could be the hourly price movement ranges, the daily price movement ranges. It could be the trend itself. It could be the 200. There's a lot. The second layer is whatever that indicator is, right? The first layer is, why are these stocks like a school of fish swimming together, and grouping them up in that way. So that's the way I scan. And that layout that I just showed you all, that is what we use in the mastery. It's the layout that I share with the members so that we can group these stocks up in that way to understand why one stock could affect another, or a group of stocks could affect an index. So it's really cool, and it's very, very effective. All right, good stuff, Philip. Next up, from Stanley, who asked, please let me have your thoughts on Walmart in the near term. Okay, so Stanley, I think I understand what you're asking, but let's look at it two different ways. Near term, don't know, right? We have to be really specific, gang. Whenever I see a Twitter feud of differences on analysis and symbols, it is almost always a lack of agreement of what we're talking about. So it could be, one trader could be saying, hey, I think Walmart's going to be going up, and they're looking at a 5-minute time frame, and their time horizon might be 1 hour. Another trader might be looking at an hourly time frame there, and their time horizon could be 1 to 3 days. If I'm looking at a 1 to 3 day time horizon based on the 1 hour chart, I'm bearish. But again, what is near term? It's a very subjective thing. So that's why I encourage everyone to think specifically in time frame and time horizon. And by the way, gang, never, although I see this happen all the time, please do yourselves a favor. And you're not the regular group of traders at all in the trading universe, right? But what do most traders want to know? Where's Walmart going to be in 3 days? Really? I no sooner know that than anyone knew what Monday Night Football score was going to be last night, right? On a Friday. And that's what I try to tell traders. Can you imagine if on Wednesday, even Tuesday, I'm going to tell you what all three Thanksgiving football games are going to be. Who's going to win and what's going to be the score? And you say, Rog, you're out of your mind. You're just guessing. It might be an educated guess. Maybe you played football. Maybe you bet. I do none of those things. But if I were to sit here and say all three Thanksgiving games on Thursday, here's the winner, here's the score, you think I was out of my mind. Yet, turn on financial media, and that's all they do. And we believe them. So it's not ever going to be, here's where we're going to be. It's how is it moving, and what are the obstacles in the way, and how can different time frames set us up for a different potential setup. Time frame, time horizon. So if I'm looking at the 1 hour time frame, it's weak. If I'm looking at the 5-minute time frame, it's chop. But in fairness, the bell hasn't rung. And if I look at the daily time frame, now I'm talking maybe 2 to 10 days in time horizon. Time frame is what is the chart setting on that? What's the interval setting, right? And time horizon is how long conceivably could that trade last based on the knowledge of that time frame. A daily time frame could be 2 to 10 days. And it is really interestingly sitting right now in a neutral market trend, nearly oversold stochastic at the 200 exponential moving average. Those are the white dots in the chart that I have on the far right. So again, when we think about how we look at the market and we think about how we ask the question to somebody else or ourselves, time frame, time horizon, right? And so notice that each one of these time frames is a completely different setup, because what's happening in a day by day slice of psychology, maybe that's another way to think about it. Each interval, each time frame is a slice of psychology. Everyone knows that a 5-minute slice of psychology is very different than, say, a weekly, but it applies to all the different time frames in between. And so that's what we need to ask ourselves. We really need to get specific about time frame, time horizon, and then that's going to lead us to the best potential setup. So if I am a short-term bear, 1 hour time frame. If I'm a longer time frame, longer time horizon bull, I'll keep an eye on that daily. And then this kind of goes back to the other question that Philip asked somewhat relatedly, which is, what sector is Walmart in? What are the group of stocks, the school of fish that this thing is swimming with? Why would they all move together or not? And so it's not just looking at Walmart, but it's also looking at all the other stocks that tend to move like Walmart. So Stanley, thank you for your question. Tommy asked, when price pulls back to a buy zone, do I prefer going long at the money or in the money calls? My rule, Tommy, is at or slightly in. At or slightly in. Never out. Out of the money is reserved for folks who like to use max debit. Max debit, as many of you probably heard me say, is like saying that by smashing into a wall, the car stopped. That's the same thing as using the brakes, right? So I think out of the money is mostly for folks who risk max debit, which is not a risk management strategy at all. Airbags going off is not a risk management strategy, right? And then as far as slightly in, the closer I am to expiration, Tommy, I'll think more about being a little bit more in the money. If I have more time, then at is fine. So I'll think about the time decay factor a bit as far as that very narrow window of at slightly in the money. And of course, I hope it goes without saying, liquidity is a big part of that too. Is the open interest sufficient? Is the spread reasonable? Alex asks, I'm at the CME FedWatch tool. It's reading 100% hold for the next 2 meetings. I've never seen that before. It's going to vacillate, Alex. Yeah, it's going to vacillate for sure. Anything above 80 is going to give us a fully discounted. Yeah. All right. Larry asks, remind us which market leads. Leads? Remind? Larry, you've never heard me talk about a market leading or lagging. That is for sure. I don't believe any market leads or lags. Is the NASDAQ probably more influential? Yes, because the XLK, which is the number one weighted sector in the NASDAQ, is also the number one weighted sector in the ES, and it's the number 2 weighted sector in the Dow. So XLK, think Apple, Microsoft, has a unique position in equities, in the indices, because it's weighted significantly across all 3 of the indices, Dow, Nas, S&P. Financials would be the second most interesting because financials are the number 2 in the S&P and the number 1 in the Dow Industrial Average. But there you have it. XLF is the number 1. So it's really the sectors. You will never hear me talk about leading and lagging ever, ever. I don't believe in it. There's no, and I'll tell you all right now, I'm not going to say there is no Santa Claus. I'm not going to say there's no Tooth Fairy. I'm not going to say there's no Easter Bunny, right? But I will tell you, anyone who says indicators lead, foolish. Anyone who says there's an index that leads other indices, like the Russell, when is that stupidness going to die? Foolishness. Please don't subscribe to that. And I will never, ever say, because that's just arrogance, that my indicators lead. They just project where certain support and resistance can be. And I'm never going to say there's an index that leads. Nothing knows the future. I know we want it, and I know people will say it, but it's just categorically wrong. So yeah, Larry, I am so glad you asked, because that's a topic that is laughably, it just won't go away. It just won't go away. And yet it doesn't serve anybody to compartmentalize the markets into deluding themselves, think, oh, this one symbol shows us where everything else is going to go. No, but there is a way to understand why it will go. So if we understand the sectors within the indices, much like an engine, right? All these engines are, basically the Russell's a 1-cylinder engine with the regional banks. The Dow is really arguably a 5-cylinder engine. The S&P is a 3-cylinder engine, and the NASDAQ's a 3. When you understand the sectors that I'm calling cylinders here, you understand why the motor is going to go, why it will be healthy, why it's going to accelerate or decelerate. So if we look at the pieces of it, we don't have to look for leading and lagging. We know why it's operating healthy or not in a healthy way. So I hope that makes sense. All right. So that is that. All right, gang, as always, thank you so much for being here for Charts and Coffee. Look, I'm not always going to sound like everyone else. All right. I'm going to have a lot of coffee in my system. I'm not going to sound like everyone else, but what I'm going to tell you is what I do, right? We talk our book. We talk our positions. It's never about my opinion, and it's never about analysis. The latter are useless. We trade what we see, not what we think. And that is what I hope you are seeing in this time with me every morning, Monday through Friday. And by the way, I will be here every day this week. One of my favorite sessions every single year is our Thanksgiving session. The markets are closed. We can have a longer discussion. And we will have Charts and Coffee on Thursday. I figure before we start watching football and get drunk on tryptophan in Turkey, why not take a look at the market? And we will do that on Thursday as well. So hopefully, gang, you're sort of breaking out of the group think. You're saying, hey, that's what the sheeple are doing. And if 90% of folks who play this game lose, why would I want to think anything like them? That's what a mentor told me early on. That's not to say we're going to be a contrarian, right? But we're going to question what I'm telling you. Go take a look at the sectors. Go take a look at the indices and prove for yourself so your brain can say, oh, wait a minute. I know I've been told that, but is that really how that works, right? So anyways, I hope I'm giving you the knowledge to seek out more knowledge, as always. All right, gang. Have a great one. And we'll see you all tomorrow, same time, same station. And be good to each other. I'll talk with you soon.